Thank you. I'll take all questions after I'm finished, but right now I think we're all relieved that the election is finally over. Now we go to what is going to happen. We have heard a lot of things as far as what the tax law is going to be, what the taxes are going to be, how you're going to save money, how you're not going to have to do this and that. Now let's get down to the real world. Right now, all the things you've heard will probably happen, maybe, but it'll happen over a period of time. Nobody knows how long it's going to take for it to come into play or what's going to finally come into play. What they were talking about was dropping the federal tax rate on corporations from 35% down to 15%. His Republican colleagues in Congress have said NFW. There's just financially, it's an impossibility, and you're more likely to have it at 25%. I was the founding senior partner of a firm that grew to 9 partners, 65 people, and we had a lot of fun, did a lot of planning. The largest client I had started as a one-store operation, grew to $7 billion in volume, and became the largest flooring contractor in the world. They got audited by Internal Revenue. I do not allow my clients to accept Internal Revenue into their offices. You don't want them there. They are not your friend, they are your enemy. And we rented a space in our building, had them there for 18 months. And the initial assessment that they had was about $1,200,000. Lasted for 18 months. We worked with them, we worked against them. We ended up settling for $10,000. Clients were obviously very happy. I subsequently found that they were going to be audited again. What happened was they called me up and I told my manager, I said, this is going to happen. He said, that's great. We ended up with our fees, ran almost $100,000, and he split the fees with me on it. So he was a very happy camper. I said, no, I'm going to try something different. He said, he rolls his eyes and says, what now? And I said, I'm going to see if we can talk Internal Revenue out of auditing them. And he said, why in the hell would you want to do that? Look at the fee we got. I said, it's just a challenge, and I like challenges. The money is great, but the challenges are even more so. So we talked them out of it. I had an unhappy manager. We work a lot with small and medium-sized businesses, and in one case, they were being audited, and we got, 4 years ago, they still haven't contacted us for anything. We've got them pushed off so far. My deduction approach is entirely different. It's out of the norm. My philosophy is when in doubt, deduct. If you don't take it as a deduction, Uncle Sam is not going to come in and say, gee, you're nice guys, we'll give you this deduction. They don't operate that way. So what I do is I tell the client, set up a spreadsheet with all of your different business categories in there. You want to have about 40 columns. In the 41st column you have, what you do is that's the personal items. So if you get all the way over to column 41 and you've got something to put because you couldn't put it in the other items, you better go back and look again to see, because almost everything that you spend as you're in business is related to business in one way, shape, or form. And it's just a matter of you're being smart enough to recognize what's going on. Also, what happens is this. Uncle Sam is continually bombarding you with notices. 95% of those notices are incorrect. A lot of people end up paying him just because the amount is small. Don't do it. Look at it. Make sure that it's accurate. And on top of that, especially with subchapter S corporations, if you file late, you're going to get hit with a penalty. Clients have had penalties up to $3,000 or $4,000 by filing late. You don't want to do that. You want to make sure that you file timely. You get an automatic exclusion abatement for the first time that you do it. In fact, what happened was we had a number of clients that were unable to give us the information to file the returns timely. And I says, we're going to have a problem. I came up with a thought. We ended up filing a return with no transactions on it. And client got audited, and the agent came in and said, what are you going to do? You didn't file your return on time. You're going to get hit with a penalty. I said, no, it's there. She said, but it's not a complete return. I said, I don't care. The return was filed timely, and that's all that needs to be done. So there's more than one way of skinning a cat. Credit cards is a great source for you, especially from a cash flow standpoint. If you charge anything before January 1st, 2017, you get to deduct it on your 2016 return, even though you have not paid for it until 2017. Another thing that we found very helpful is putting your kids on the payroll. This is a great way to do it. If you're not a corporation, if you're a corporation, you don't get that benefit. Kids have to be under 18 years of age. You can pay them where they can probably make $6,000 or $7,000 a year and pay no taxes on it and pay no Social Security tax. So as a result, when you get finished with it, by paying the kid, you're going to get back 49% tax savings by doing that. You've helped the kid to fund his education. Cell phone, all other expenses before the end of the year. You should be looking to pay or prepay these expenses if you're on a cash basis. If you're not on a cash basis, you're on an accrual basis. What we did there was we picked up a client a couple of years ago, and they were told by their dermatologist doctor, who was a client of ours, that they were going to owe between $500,000 and $1 billion in taxes the upcoming year because business was going back gangbusters. They contacted me, walked in, hit it off real well with them. I do things off the wall. I went out to meet them. They're there to greet me at the front door, and I walked right past them. There was a picture on the wall that was not straight. I straightened the picture and then went back and we went on to do the business. We ended up that year where they owed $18,000 in taxes. The following year, we got them a $93,000 refund. And this year, I have no idea what's going to happen. But I will be out there the last 4 days of the month working with them as far as the transactions and everything that are going on so that we can come up with the desired result that they want to pay. Pay your fourth quarter Missouri estimate in 2016 instead of 2017. That will help you. On your home office deduction, what you do is you take the square footage of your home office, take the square footage of the entire house, and come up with a percentage. However, the entire house excludes some areas in your house. You eliminate all hallways, you eliminate all bathrooms, so that as a result, by doing that, your denominator is a lower amount, which means you get a higher percentage of the deduction. That'll probably end up getting you another 25% or so in the way of a deduction. Pay your January mortgage in December. Pay business expenses with a credit card. You should have a business credit card and a personal credit card. Personal credit card you should keep locked up at home so you can't use it. What I do for my clients is on the year-end planning, I go over with every client before the end of the year, and we do a projection to see where They are going to be what they can do to defer income, accelerate expenses. When you're on the cash basis, you can send your bills, your invoices out late to your clients. Also, you've got to thank the post office. They are very kind and generous in tax planning. It always seems that the checks that you get from your clients never get to your door before December 31st. They're always, that first couple of days of the year are really phenomenal. If you've got a meeting for your business, don't have it at a local hotel. Pick a nice, luxurious place to go. You're entitled to it. Your business needs to do it. And you can have a great time with it. As you can tell, I think outside the box. Andy last time had come out with his Internal Revenue Code that's about yay thick and says he doesn't know all these different answers. With my partners, they never even gave it to me. They did not want me constrained by the Internal Revenue Code. Also, as you're setting up a new business, make sure that you set up separate accounts for it and you protect your corporate veil, because that is extremely important. You set it up for protection, and if you don't do the appropriate things, you're going to lose that protection. We had a lawsuit where we were able to break through the corporate veil of a company and ended up getting our client a nice refund. The tax return due dates are now different than what they used to be. So take a look to be sure. The corporations, the C corporations, are now due on April 15th instead of March 15th. The partnership and the S corporations are now due on March 15th instead of April 15th. So you got to watch which way you're going on it. When you've got an S corporation, what you have the ability to do is you've got a line for your officer salary, which you should be paying some, and the balance of it is your profit that is also taxable. But if it's at the top line and it's a salary, you're paying the Social Security tax on that and the payroll tax. The bottom line, you ain't paying no payroll taxes on it at all. So you can pick up an extra 15.3%. But you don't want to be piggish about it and not take too much in the way of salary, because otherwise they'll come back and try and go through it. And that's a high profile area right now that the government is looking for. Refunds this coming year are going to be delayed. They're going to be delayed on anybody who has the additional child tax credits or the earned income credit. This has been a great area for scammers, and they've taken billions and billions of dollars away from internal revenue. So what you are going to do is have to put up with that. There's also a scam that is just, we've been made aware of. It's an email that you receive from Internal Revenue. Internal Revenue don't send you no emails. This one here is for what they call a CP2000. Don't even open up the attachment, because if you open up the attachment, you're dead meat on it. Also, what they're going to do is on the driver's license, you're going to have your driver's license. That's going to become part of e-filing in order to make sure that you are what you say you are. Contributions, you can give contributions that are normal charitable contributions. You can give it of appreciated property and not have to pay any capital gains tax on what you have picked up as a deduction. However, if you have a loss, sell it first, take the loss, then make the contribution to the charity. You're going to be better off that way. Also, for people who have their IRAs, in addition to taking the required minimum distribution, if you've got a charity that you want to give to, you can take that out of your, if you're age 59 and a half or older, You can take it out of your IRA or your 401k, just out of your IRA, and get that as a deduction. You get no deduction for it, but it has reduced your IRA account, and things are good. What I'd like to do is thank everybody for the opportunity of talking to you. Remember, CPA stands for Certified Public Accountant. I am a constant pain in the ass. I can prove anything, and I am cantankerous, precocious, and awesome. I walk on water. The bottom, not the top. Thank you very much.
5 minutes more for questions.
Oh, don't ask me any questions. I don't know the answers to them.
Anybody have any questions?
Any questions?
He knows the answers, he's just messing with us.
Yeah, I go.
All right.
So John, what criteria should we use when we're trying to find someone who wants to do our taxes? Is there some way to know who the imposters are and who the legitimate people are for someone like myself?
Right. Well, first of all, talk to people that you know who are satisfied and like the person that they're dealing with, as far as a lot of different attributes that you would be looking for. Then interview them. Sit down and talk to them and find out what they are. Some people are more aggressive than I am, others are not. And it's your comfort level. I mean, I had one client who did not itemize his deductions because he felt that he would be audited by Internal Revenue. It was costing him thousands of dollars, but that was his comfort level. So you talk to him, you find out. Bring in, what I found very helpful is to have the client bring in 3 prior year tax returns. Look at them, give my thoughts and opinion on it. We have found in quite a few cases that something was not done right. We file amended returns. We're able to get them refunds. Client is thrilled, we're happy, and that's what it's all about. But use that person as your advisor. Don't package up in a brown bag all of your receipts. Bring it in and say, here I am. And he looks at it, he tosses it in the waste paper basket. They send out booklets ahead of time to help you put together all of your information. Who are you going to be dealing with when you're having your return done? Are you going to be dealing with the head guy or the janitor? I mean, those are important things. With me, I look at every single client, I interview every client, and it's on a continual basis. And I'll start my year-end planning on some of them at the beginning of the year. My approach is not only when in doubt, deduct, but tax planning is a year-round opportunity. It's better to have the money in your pocket than Uncle Sam's. Also, there's one other thing that I found is on businesses that the officer would normally be hit with a penalty for underpayment. What we have done is we will do our projections before the end of the year. In fact, this one client, I'll be out there on the 28th, where their payroll is due at 2 o'clock in the afternoon. And we will have completed by then what is needed and what their taxes are going to be so that they can pay it in. And they have not paid a quarterly estimate during the entire year. So we're able to give them the use of that money for that time. And because it comes from withholding, Internal Revenue calculates that as being held equally throughout the year so that you've got the cash flow for the entire year. Oh, not him.
John, I'm helping you out here. So I understand the IRS collections is being outsourced. How do we determine when we really have a contact from the IRS or one of their collection agencies and how we have a fraud person trying to get money from us?
Well, you do a lot of soul searching, a lot of detail. Also, what will happen is this: you check with your tax preparer. The tax preparers have a direct line that is still, up to this point anyway, available to us, where we can call up and get an answer, get hold of somebody within 3 or 4 minutes, whereas in the past, I've had it where we were on the phone for 2 hours waiting for that. But this way here, hopefully we'll be able to double check on it. I mean, it's going to be hell on wheels. It's going to be something that the government has no idea what they're doing in the first place. They're just loading more things on them. They're overwhelmed with what they're trying to do with everything else, and they're losing people. But other than that, things are perfect. Thank you.